ICT OTE or optimal trade entry is one of the most common and wrongly traded ICT concepts in the trading industry. Let me explain. This is what a normal Fibonacci trading entry looks like, and this is what real ICT OTE looks like. Don't see any difference? Watch this video to the end. There are two main components that needs to be utilized when trading optimal trade entry: time and price. In order for this to work, you need to trade during a specific time when algos are most active. The time when you can enter the trade is between 8:30 a.m. and 11 a.m. New York local time. To properly enter the trade with optimal trade entry, you need to enter between the Fibonacci retracement from the recent low to the recent high, or from the recent high to the recent low, depends on if you're buying or selling. The optimal trade entry is between the 0.76 and 0.62 level, and there's a 70.5 level in the middle. For targets, you need 0, minus 0.72, minus 0.62, and minus 1. You also need a level 1 because this is where you put your stop loss. But where should you trade it? These setups form when price reaches a daily level, which can be a daily fair value gap, daily order block, daily breaker block, or any other PD array. If price is consolidating or not have reached any PD array yet, then don't enter the trade. For example, price is at a bearish order block on a daily chart, as you can see. So we will be selling today. And as you can see, this is the daily bearish order block from the picture before. This is the level. We tapped into it, and now we wait for our times between 8:30 and 11 o'clock. And we look for entry based on our bias, which is short. So we look to take a paper trade short and let the price play out. So we look for a short-term high and a short-term low, and then we look for a 62 and 79 level. This is the range where you should take the entry. Now you can take entry directly from 62, or you can look for a fair value gap or order block inside that level to take the entry from and to get better RR. So let's see. So we got a short-term high right here, and now wait for a short-term low. As you can see, this is your short-term low. So the entry is between 8:30 and 11, and so we take our Fibonacci from high to low, and as you can see, this is our 62 level to 79 level right here. Now you have this order block right here aligning inside this range, so you could take entry from this order block right here, or you can take entry like me from the 62 level, place our stop loss just above the high as I told you. And now for targets, you target minus 1 tension from the high to the low, or from low to the high, depends if you're buying. So you take some off at the 0 level, you take some off at the minus 0.27, minus 0.2662, and you terminate your position at minus 1 extension. So let's see if we get tagged in. Right here, we enter the trade. Your trade would get filled right here, and now your order block trade would also get filled. This would give you a 6-to-1 RR on the final TP, but for the simplicity reasons, as I said, we're going to take entry from the 0.62 retracement level, as ICT does as well. So let's see, let the price play out. So we're tagged in, now we just wait and let the price play out. So we already hit TP1 and TP2, and we take some off right there, and now we wait for the third TP to be taken, and we can take some partials there. So as you can see, the third TP got hit, and now we look for the final TP where we'll fully close the rest of the position that is open. So we'll let the place play out, and let's see. And boom, we just hit the final TP. So all 4 TPs have been hit. Stop loss has almost been hit, but since this is an institutional entry and this is how algorithms move, we expect a move to the downside and expansion to the downside. Now price moved more to the downside than our take profit, but this is our model. This is how you should trade it. If it doesn't work for you, then switch the model. There's a lot of ICT models that I will mention on my YouTube channel as well, so subscribe.